All right. Now, I'd first like to discuss the precious metal markets and how the mining sector is holding up right now. A couple weeks ago, we saw a slight rise in precious metals, correlated with a drop in the overall stock market worldwide. But we have seen kind of overall over the past, many months, gold and silver just kind of consolidating, going sideways. What is your perspective on the current state of the precious metal market and also how the miners have been affected?
Well, there's two questions there. One is the metal price and how are the miners reacting? Just from a macro or global scale, the miners are reacting through, mostly, improving their operations, bringing in technology. The whole mining space is going through, quite an interesting change. We're noticing, today, well, not just today, but, going back the last 5 years, where there's a lot of young into this sector, and these young people are mid-20s, electrical engineers, chemical engineers, guys and girls that are coming to the sector with really interesting ideas and ideas of change, and I'm very, very optimistic of the mining sector over the next 10 years. I think it's going to be dramatically more efficient going forward, just as a function of bringing in new methods and new technologies. And we saw that in the United States oil and gas sector, due to fracking. Now the U.S. is, self-sufficient on oil, which 20 years ago no one would have actually thought that was even possible. Yet it occurred, through the use of technology. So, we're seeing technology really have effect in some really important areas of our lives and our industries, which is a fantastic thing. And so that's how the mining sector is reacting to current prices. Because we know if you look around the planet, there's less copper, less zinc, less lead, less silver being produced on a worldwide basis than there was 4 years ago. And that's a result of low prices, because the margins aren't there to make the necessary investments to continually expand production. So production is going south, rather than north. So, going to the metal itself, or the metals themselves, yourself, the big trade right now is, short emerging markets, short everything other than the U.S. Go long gold. I wish. Go long the U.S. dollar. Go long S&P. Go long Nasdaq. And a lot of funds, a lot of people are making a lot of money on that trade for the last couple of years. And when that trade stops working, then it'll change. And I look at this market today very similarly as I do to the market back in 2001, where we topped out on the Nasdaq, due to the Nasdaq or the internet bubble at that time. And I think we're just seeing another bubble that's repeating those similar types of years. And over the next 2 to 3 years, I'm expecting major corrections in the big U.S. markets, and that's going to then all that money, as far as I'm concerned, is going to start flowing into the resource sector.
Now, with respect to the recent Fed rate hike, and it seems like, obviously we don't know what's going to happen in the future, but the Fed kind of hinting that there will probably be more rate hikes in the future. How do you think that impacted the precious metal sector?
Well, I think from a headline perspective, it's definitely putting some pressure on it, because there is a view from a headline perspective that as rates go up, gold must go down. But, that's that's really not true, because it's really based on inflation. It's your real rates that actually affect gold. So the difference between inflation and your interest rate, your 10-year treasury, is actually your real rate, and that rate. A lot of pundits out there. You listen to CNBC, you listen to other analysts, and there is a view that rates are going higher, and inflation is somehow curtailed, by the central banks. So if that's what the trade thinks, or the hedge funds think, then of course they're going to be short gold and long treasuries, or long the market. I mean, so But I don't believe it. I personally think that inflation is going higher, and I don't think rates are going much higher either. I think rates are topping out, as we're seeing. I don't think the governments, the central banks, can afford to take rates up too much higher. The interest on the U.S. debt was the highest ever paid. Just last quarter, I think it was over $500 billion in interest payments they paid, which is an extraordinary amount of money, obviously, for a government to pay out in interest, and if rates continually go higher, and of course their debts are going higher because they don't stop borrowing money. It's not a very, very good situation. So I quite honestly think the rates are going to go the other way. I think we're going to start to see a reversal with the Fed starting to cut rates over the next 1 and 2 years, likely starting in middle of 2019. And inflation, however, because of all the money supply in the system, is going to pick up. And so you're going to see a drop in actual real rates. And that's going to be a very bullish case for gold.
Really interesting because, I've heard that also from other guests I've had on that, the Fed is hinting at higher rates in the future, but really what they're going to do is reverse and possibly even do like more quantitative easing, cutting rates, more easy money policy. And if that happens, what is your perspective on what could happen? I mean, obviously that would be very bullish for precious metals. The stock market has been reacting negatively we saw a pullback to the announcement of more rate hikes and stuff. But if we saw a reversal, would it be to the moon for the stock market as well?
I don't think so. I think that people are going to start to figure out that the U.S. dollar is overvalued, and these markets are very cyclical. They go in trends, right? And so the trade has been buy U.S. dollars, buy U.S. assets, and it's worked really well. But it's really hurt everyone else on the other side of the trade because you've got all these emerging markets, and everyone knows. We all read what's going on in virtually every country outside the United States with depressed currencies, and all their debt is denominated in U.S. dollars, and it's really putting a lot of pain on the rest of the world. So how long can the planet sustain this type of a situation? We're going to have major calamities around the world. We're going to have governments collapsing. It's just going to get really ugly if this U.S. dollar continues to go higher and stays higher for much longer. It's going to be a very, very serious situation. And you could look at events going back over the 20 years where we saw many currency crises around the world, which caused major stock market corrections in the United States, and because the U.S. is tied into all this. It is a global economy, so you can't have dozens of countries around the world in extreme pain and collapsing, and just have the U.S. absolutely immune by it. So far, the U.S. has got away from it, but there's an end to all of that, and it's just a matter of when, because no one's got a crystal ball.
Moving forward here, getting back on precious metals, you've talked about the gold-silver ratio on our show before, and you've said that it should be more like 9-1. What are your thoughts right now, if you want to give us an update on it being over 85-1 right now? It takes about 85 or more ounces of silver to purchase 1 ounce of gold. So what is your perspective on why it's so out of whack, and why do you think it's going to 9-1?
Yeah, well, it's out of whack because of the trade. I listen to read analysts, listen to analysts, and it's this short emerging markets, short metals, short miners is still a trade that's worked really well, and so you've got all the hedge funds on one side of that trade. That's why First Majestic has its largest short position ever in the history of the company. The whole there's multiple miners that I know of that have record short positions. Silver, gold have record short positions, by the hedge funds, and that's just simply the trade, and it stops being the trade when the headlines, say it's going to stop, and then all of a sudden, all the hedge funds, they rewrite their algos, and they go the other way, and it's unfortunately as simple as that. There's no supply demand change in silver or any of these other metals in the last 12 months, actually, or 24 months. It was actually even better. You look at the consumption of silver. The miners are only producing 800 million ounces of silver a year, and we're consuming 1 billion ounces of silver. Electric cars, VW just came out and said we're going to have every single automobile in our fleet to be, or our model line to be electric by 2030. And Audi just come out with their first model a couple of weeks ago, and this ball's rolling. Like, we're getting off fuel combustion cars, and that's just a fact of life. The world is going electric, and that's going to take millions and millions and millions and millions of cars to produce, and every one of those cars has a couple of kilos of silver. It's about 3 times more silver than a normal fuel combustion car, and in a market that's already a deficit. I don't know what's going to happen, but we'll see. Price has to go up, in my view. And solar panels. We consume 90 million ounces of solar panels, or 90 million ounces for the solar panel industry in 2017, a record high. And in a market where a miner's only producing 800 million ounces a year, and there's one buyer, a new buyer, only in the last 5 years, has now taken over 12% of that market. And it's going north. It's going up. Like, it's increasing right now. And governments want to go solar. They look at it as a clean energy. Homes. I was in Phoenix the other day. All the houses are covered in solar panels, and it's really a very interesting move. And the Saudis are building huge solar farms, and the Japanese are building huge solar farms. The Americans and countries, governments around the world, as I said, are adopting this technology. And of course, where are they going to get all the silver to fill the demand for electricity for around the world? I think silver is a very compelling story, but it just hasn't shown up in the price yet. Unfortunately, it's been quite the reverse. Silver prices have been going down almost every year for the last 5 years, which is not only confusing, surprising, and frustrating, and just disappointing, and for many of our shareholders as well. But I think it is a hedge fund trade. It's not done by logical reasons. It's just when it changes, it changes.
Now, one of the, I guess, big arguments for silver, some people have pointed to the fact that it's actually under the cost of production for a lot of companies. What is it? What is the cost of production for First Majestic right now? And is it still true that silver is under the cost of production for many companies?
Yeah, that is a true statement. Unfortunately, the cost of production is a function of investment. Because obviously, it makes some sense. If you're going to, invest more in development, you're going to invest more in exploration, invest more in expanding your operations. Those costs are real costs, and they show up, of course, in your cost. So you have to pay for those investments through expanding margins, and that's what the mining industry does. But unfortunately, when margin compression is occurring, as we're seeing now, silver was $18 at the beginning of the year. All our mines are profitable. Now at $14.50, we've got 3 mines that are struggling, and 2 mines are still doing fine, still doing quite well. 1 mine doing okay, and 3 mines struggling. Because that $3 move or $3.50 move in the silver price, amounts to over $100 million in revenue for us. So it's a big change. So as a business, like any business, we have to curtail our investments. So now we're cutting exploration again, we're cutting development again. We just did some layoff. We did about 100 layoffs 2 weeks ago. We've got another 100 layoffs today, actually, unfortunately, and we're going to continue. We've got a plan to reduce the workforce by around 10% over the next 6 to 8 months. And, these are things we just have to do because, even though I'm a bull on the metal, And I do believe that the silver should be trading at 9-to-1 because that's our mining ratio. We mine 9 ounces of silver for every 1 ounce of gold globally. That's what it should trade, which is obviously we're nowhere near that price. But my views on the future of silver aren't really that important when it comes to running a business.
Now, how much is the price of oil really putting a floor on the silver price? I mean, oil is above $65 a barrel right now. Is that putting any sort of floor on the silver price?
I don't know about putting a floor. I would say it's probably hurting the mining sector more than anything, which is affecting investment. So, if the mining sector can't invest as much due to high oil prices, then there's going to be less development, less exploration, and then the less metal produced. And that's what we're seeing. We're seeing less metal produced today than we did, 3, 4, 5 years ago. So, oil is a huge cost of ours. It's about 25% of the cost of our business. And fortunately, 80% of our costs are denominated in Mexican pesos. So the peso has been weak over the last while, which has helped us. So we've been a little bit challenged on one side with the diesel, but we've been helped on the other side with the Mexican peso.
Definitely, and getting into First Majestic in particular, we were talking before the interview, and you were talking about how First Majestic has actually increased. It has doubled in the last 6 months, the company size. Can you discuss what events have led up to this amazing growth for your company?
Yeah, well, thanks for pointing that out. We pulled off this very, very major acquisition, after, almost a decades of thinking about it and discussions with all the, players, owners and so on. And stars aligned and we were able to, bid on this mine, back in 2017, and we were awarded the winning bid, and we announced it in January of 2018 and closed on May 18, and we now basically doubled the size of the production. We went from about a 12 or 13 million ounce silver equivalent producer to basically a 27, 28 million ounce silver equivalent producer overnight. We went from 3,000 employees to 6,000 employees, and it's a pretty chunky asset. So it's a very important mine in Mexico. It's the largest silver gold mine in the state of Durango. It's one of the largest and most important mines in Mexico. It's been in production for over 300 years, and it'll be in production for a lot longer. And we paid $320 million for it, and it's spinning off about $100 million in profits, as we speak. And we think we can improve it. We think we can bring costs down even further, even though it already is a pretty low-cost operation. We think we can improve it a lot, and we think we can expand the production as well. It's going to take time, but over the next 1 or 2 years, it's going to be it'll be getting a lot of focus of ours and our shareholders, and I think it's going to do well for everyone.
All right. Well, Keith Neumeyer, thank you so much for your